Clearly you've bought the dip, but what if it's not a dip? How much have you considered the possibility that this is part of a prolonged slide?
Well, we think the primary dynamic is the China exodus. There's a forced and there's a rushed exodus of capital and mining from China that was a bit of a surprise that kicked off in May. And that's driving the dynamic in the market right now. Our strategy is long-term. 10 years ago, I met with you, Emily, and I talked about the mobile wave. And the mobile wave was the dematerialization of music falling to the Apple iPhone and then turning books into iBooks. If you want to give music to 5 billion people, you got to take the music out of the CDs. And if you want to give books and education to 5 billion people, you have to take the words out of the book and you got to dematerialize the library. Bitcoin is the dematerialization of property. We're sucking the value out of gold and real estate and other property assets and collectibles and art. We're putting them on a blockchain. We're giving it to the people. It's a long-term trend. It's 1,000,000 times more efficient than hauling your property around on your back. And if you want to give property rights to 5 billion people, you need Bitcoin to do it and a smartphone. So it's a technology play for us. And we're very confident that over the next decade, 5 billion people are going to have property on a smartphone. And Bitcoin is going to be the primary blockchain that's used to do that.
Michael, I went back to that interview from 2012 to prepare for this one. I remember it. But speaking of smartphones, give us the truth. I mean, how often are you checking your phone and checking the price? Are you losing sleep? Do you meditate? Do you have a stiff drink when the price goes down?
Well, look, I'm not a trader. If I was a trader, I'd have anxiety. That's a difficult job. I'm a technology believer. I bought Facebook before it came public. I bought Apple when it was a couple dollars a share. I held it a decade. This is a 1 decade long trend. MicroStrategies acquired all this Bitcoin with a combination of equity and debt, but the debt is all long-term debt. It's either unsecured convertible bonds that run 5-6 years or secured debt against our cash flows of our software business. We don't mark anything to market, so we're not really concerned about short-term price fluctuations. In 6 or 7 years, yeah, I expect Bitcoin to be higher than it is today, and how it gets there, it'll be volatile.
Now, I know you haven't been a fan of altcoins in the past, but are you considering holding other cryptocurrencies beside Bitcoin? Are you already holding them? If so, which ones?
The way that we look at the digital ecosystem is you've got digital property. That's like owning a block of Cyber Manhattan. You're just owning the Granite City block. 1 Bitcoin is a block in Cyber Manhattan. Then you've got digital currencies like Tether. They're currencies. There's not much upside. They're just going to be regulated like money market funds in cyberspace. And then you've got digital applications, and they're trying to dematerialize insurance companies and exchanges and banks. They're kind of like the buildings on top of the Granite City block or the business in the building. It's a different thing, If I went to Vegas, I would just want to buy all the land in Vegas. Somebody else might want to build the hotels, the casinos. That's not for us. It's a complicated business. It's a little bit more competitive. We're waiting for a bit more regulatory clarity. If you're going to be an insurance company in cyberspace, there's probably insurance issues or trading issues. We've adopted a very simple strategy. Buy 105,000 blocks of Bitcoin in Cyber Manhattan. We think it's going to be good for hundreds of years, and one day billions of people will want to live there.
But why not then, and this is a question coming in right now from a terminal user, buy other more energy efficient forms of crypto? Are you considering that?
Well, we actually think that the way that Bitcoin mining works is the most energy efficient way to create a trusted digital property network. It's you put in $1, you get out $200 of value on Bitcoin. If Google puts in $1 of energy, they get out $10 of value. It's in fact the most energy efficient industry in the world, and the amount of energy that it uses is a few basis points of the amount of energy used in the civilization. So I'm not concerned about the energy use. There's no more efficient way to do it. If I wanted to run a centralized application, I could do it with less energy, but there's no way that you can create digital property that's going to last for hundreds of years outside of the control of a CEO, a government, or a country that has integrity and durability without using energy.
Let's talk about the crackdown in China on Bitcoin mining. What does this mean for the longer term?
Well, China had 50% market share of Bitcoin, and they were generating $10 billion a year in a business that was growing 100% a year over year. And the government cracked down on it, and they squeezed the entire industry out of China. I think that given the growth rate of Bitcoin, this will prove to be $1 trillion mistake for China. So it's a tragedy for Chinese miners. It's a geopolitical mistake for China, the country, but I suppose they can afford to make $1 trillion mistake. It's a nuisance and a dislocation for Bitcoin in the near term. You see the trading volatility. It squeezed a lot of people a lot of Chinese had to sell Bitcoin and under forcible liquidations with a time frame because they have to get out of the country and all their loans got called. And so that's been a big opportunity for Western investors. Companies like mine bought Bitcoin in the 30,000 range. We would have paid double, maybe triple to buy the Bitcoin if it hadn't been for the China exodus. So we got a benefit from that. And it's a great windfall, Emily, for North American Bitcoin miners because their costs are the same and they're going to generate 50% more revenue or 75% more revenue for quite a while because the Chinese industry has been taken offline.
Now, still, it seems like there's no impetus for a rally on the horizon. Chances are a Bitcoin ETF not getting approved this year. Regulators in the U.S. are also going to tighten up. What drives Bitcoin from here exactly? And when? When do we come out of this?
There's a delay. If you roll the clock back 6 months to 9 months, mainstream media didn't cover the story and people were uncertain about what would happen. Biden being elected president was good for Bitcoin. Gary Gensler taking over the SEC was good for Bitcoin. The new class of regulators are progressive. They're more enlightened. They're more educated on Bitcoin. I think that you will in time see a Bitcoin ETF. You've seen Morgan Stanley and Goldman Sachs and most major banks start to trade in Bitcoin and Bitcoin derivatives and offer Bitcoin mutual funds. There's an avalanche of banks that are going to be offering Bitcoin services. And of course, Coinbase came public and Square and Coinbase are between them adding millions of new Bitcoin holders every month. And so you just got to be patient and look at the long-term technology trend, which is, do you believe in iBooks and do you believe in the iCloud and do you believe in big tech? Because if you believe those things, the next logical thing to get dematerialized is property on 5 billion mobile phones. Just a matter of time.